Lenders reduce their rates to try to revive the housing market. Most mortgages are cut by 0.5%. First-time buyers will come off best. Neil Kinnock attacks John Major over unemployment as it goes up again. Mr Major says Labour's tax plans are a shambles. A year after the Gulf War, America says it will keep up the pressure to get rid of Saddam Hussein. President Gamsa returns to Georgia and declares civil war on his opponents. And the murderer still taunting his victim's relatives 6 months after her death. Britain's 3 biggest mortgage lenders have cut interest rates by 0.5% for most of their borrowers. First-time buyers are likely to benefit most. People borrowing less than £60,000 get the biggest reductions. The first lender to announce cuts, Abbey National, says it wants to rejuvenate what is without doubt a stagnant market. The Halifax and the Nationwide followed suit, and other building societies are likely to do the same.
The housing market is going through its worst recession since the war, and the south is hardest hit. In London's suburbs, a bungalow like this would have fetched around £200,000 3 years ago, but since then prices have dropped by more than 30%. Now at least it's sold. Estate agents are pinning their hopes on lower interest rates and the recent cut in stamp duty to bring back buyers.
In the last few weeks, it's actually started picking up a little bit, particularly in new activity. New applicants, particularly first-time buyers, have come back onto the scene, and people going to view property has increased incredibly. As yet, it hasn't really brought the rewards of selling properties as much as we would like, but at least the activity is there.
The housing market downturn has been dramatic. At its peak in 1988, about 180,000 houses a month were changing hands, but that's fallen back ever since. In 1991, transactions in each month were just over 100,000, and the latest figure for November was the worst since 1980. Just 92,000 houses changed hands.
The market's been extremely depressed. The number of transactions in 1991 was running at just 60% of the level that we saw in the boom year of 1988. The major reason for the depression has been the collapse in confidence, and that in itself is related to the very significant growth in unemployment that we saw throughout the year.
Mortgage lenders are aware that with the spring house buying season approaching, the need to rejuvenate the market is becoming desperate. Rates being offered to first-time buyers are now the lowest for 13 years.
The main thing is to get sales going. Whether prices fall or rise, I think that's going to be a marginal effect. The real thing is to get more people moving within the market.
Today's cut in mortgage rates is bigger for loans of under £60,000. On a £30,000 endowment loan, the new saving is around £10 a month. The total monthly saving since rates were at their peak in October 1990 is over £82. On a £50,000 loan, the new saving is nearly £20. The total monthly saving in the last 15 months is £156. At £80,000, the savings are £18 and over £253 respectively. But despite 7 reductions in a row, up to now the market has failed to respond. The cuts announced today are small, and it remains to be seen if they'll have a major impact on the housing market. Recent evidence is not encouraging. People are still reluctant to take on big borrowing commitments, and that's likely to remain the case while unemployment's rising and there's a general election in the offing.
Unemployment has risen to its highest level for 4 years. The seasonally adjusted total of those out of work and claiming benefit rose by 31,000 in December to reach 2,546,000. It's the 21st consecutive monthly increase. The Prime Minister and the Labour leader clashed in the Commons over the figures. Mr Kinnock accused Mr Major of dodging the facts over unemployment. The Prime Minister said that Labour's policies would put more people out of work.
As ministers met for this morning's meeting of the Cabinet, they'd have been aware of the poor unemployment figures and the barrage they'd face later in the day from Labour. But the Conservative Party machine is in the business of trying to set the news agenda. So, following the advice of the hired helps like Maurice Saatchi and the advertising agency Saatchi & Saatchi, the Tories were once again on the attack over Labour's tax plans. The Tory party chairman accused them of being in disarray and on the run. The confusion seems to surround whether Labour would phase in their tax and national insurance proposals or bring them in immediately.
Our objectives are very clear, and we have the common sense to say that we will apply them. If, in our judgment, it needs to be done gradually, we will do it gradually. Objectives are clear, and we have kept the option of a flexible approach. That seems to me only to be common sense.
In the Commons this afternoon, each party pursued its own agenda. Labour spoke about the scourge of unemployment, Tories queued to attack Labour's tax plans.
Their muddled statements show that you can't trust them on tax. They shift their position from day to day. The only thing that is certain, Mr. Speaker, is that a party that promises to spend and spend is a party that would have to tax and tax.
Then, when pressed on unemployment, John Major explained that it was rising across the industrialised world. The Labour leader countered.
Mr. Speaker, the right honourable gentleman is a dodger.
The result of that, uproar.
When Sir Nicholas Goodison of the Trustees Savings Bank says this is the worst recession in living memory,